And we now welcome on board Shroff, the Chairman and Group CEO at UPL, to try and understand what exactly was the rationale behind this demerger. And of course, we've got Toshan Tamhane as well, the Group COO, joining in on the show right now. But gentlemen, morning, great to have you both. Jay, if I could start off with you, explain to our viewers the timing of this merger and what exactly do you see moving ahead in terms of your objectives now?
At UPL, we have built three major platforms. One is the specialty chemical platform, Advanta, which is our seed platform, and UPL Crop Protection, or UPL Global, as we are going to call it now, as the third platform. Each of these platforms are these strongest players in India and globally in their individual sector. We believe that this restructuring will help each of these platforms to, while there are synergies at the UPL group level, will have the operating flexibility to continue to grow and gain market share in each of these areas. We believe that the structure will simplify and unlock a lot of shareholder value in each of these companies and for the group. And so we feel we are very excited about this new announcement.
Right. And what, according to you, will be the effects of this merger on your top line? Are you predicting a rise in revenue as optimization starts to go up?
So what will happen is that each of the platforms will have a much more focused approach and therefore will have the ability to grow faster than they are growing as a group and will have much more flexibility to take decisions faster, and therefore will, by that reason, be able to grow faster, and there will be synergies at the back end. Toshan, anything you want to say?
I think, Jay, the ability for each platform to grow in a more focused manner with the right level of capital and commitment, actually, we believe will increase the ability to grow revenues, get market share, and serve our customers in a much better manner.
Right. And is the company looking at any loss of business synergies after the proposed reorganization, even in the short term, given the restructuring?
I think we often get asked the question on debt, which used to be an issue 2 years back in 2024 when our debt levels were debt to EBITDA of 4.2. But if you look at our levels today, they are in the 1.6 to 1.8 range, and we have guided to be in that range going forward. As a result of this specific restructuring, there is no change in the debt level per se, but what it does is it opens up further avenues for deleveraging. As you know, we have already filed a DRHP for Advanta IPO on 18th Jan. Through this, we have now unlocked value for creating the world's second largest pure play crop protection entity. And specialty chemicals will be the third platform available for us to continue to unlock value by raising further capital in each of these verticals, further reducing our debt levels.
Jay, if you can give us a sense of what's happening to the agricultural side, especially the crop protection side, given agricultural headwinds, what measure does this merger bring on the table, and how does that match with your peers, both global and domestic?
The agriculture industry actually is doing quite well in the sense that we have seen a good growth in demand for our crop protection products. Our seed business, both are growing very well. We have also seen some benefits of really the opportunity because of our cost position. We've been able to get more inquiries and orders and more production in our superfarm business. So all along, we have seen some benefits of that. Going forward, also, we believe that the worst is behind us in commodity prices, and you're seeing some improvement in agriculture commodity prices. This will drive further demand in growth for us, because when the prices improve, farmers tend to spend more on their farm. So we will continue to see good growth if the commodity prices improve, which is very likely.
Right, and you've squared in on a timeline of about 12 to 18 months for the merger. What will be the constitution of the board of UPL Global by then?
So the board will constitute of members from both UPL SAS and UPL, what we call Cayman, the global business. And it will have a fair representation from both. As a publicly listed company, we will follow all the requirements of having adequate independent board members to meet the SEBI guidelines and the listing guidelines. So exact the names of the people we haven't yet decided or have finalized. That will be done along the way. But it will be there will be representation of independent directors as per the regulatory, the listing guidelines.
And an analogy to that is if you look at how for the DRHP and before we reconstituted the Advanta board with the right representation from different stakeholders, and we will continue to do that for even the crop protection entity at the time of the listing.
And Jay, both a short as well as long-term basis, what value do you see in terms of synergies that will likely be unlocked as a result of the restructuring that you're doing?
Yeah, so I think the primary objective of this restructuring is to unlock shareholder value. We are simplifying our corporate structure, making sure that each of the three business verticals have independent journeys of their own. And this is not a restructuring which is a flash in the pan. This was something we began few years back with the creation of the platforms. We were successful in getting some of the world's most marquee investors, TPG, Abu Dhabi Investment Authority, KKR, Brookfield, AlphaWave, in the different platforms as our financial and support partners. And we believe that even going forward, for our public shareholders, all of these platforms will continue to unlock value. So value creation, shareholder value unlock, simplification of structure is the core objective. How we propose to do that is each of these platforms has their own journeys, will have their own focus teams, capital allocation, while maintaining the synergy and support from the parent. The parent will continue to provide certain central capabilities, treasury, taxation, digital analytics, transaction services, provide the right kind of capital support to each of the entities, and very importantly, for UPL Limited shareholders, continue to incubate new business ventures. So we believe the platformization strategy is going to continue going forward with this second phase we have done. We still have specialty chemicals, which we will unlock value subsequently, and that's been the core objective, shareholder value unlock through simplification.
Right, Jay and Toshan, thank you so much, both of you, for your time today. Good speaking with you. Okay, let's take a very quick break on that note. When we come back, full tilt on equity markets.